Currently renting your commercial space, looking to buy? Well, I've got good news for you. The SBA 7A loan program might be the perfect fit to achieve your goal. This video will teach you everything you need to know about purchasing commercial real estate utilizing an SBA 7A loan program. The first thing to talk about is eligibility. What will make it eligible? The thing to keep in mind if it's a mixed-use property is that 51% of the square footage is the commercial space that you'll be occupying. And that 51% includes hallways, basements. Sometimes the parking lot can be considered if it's customer parking. So for those properties that are really borderline, it's really important to consult your lender about whether or not it'll be eligible. So just to note, the SBA 7A loan program cannot be used to purchase investment property. Now, one of the biggest benefits of the SBA 7A loan program is the down payment requirement. Yes, you can get 100% financing to purchase a commercial real estate space. Yes, you heard me right, 100% financing, no money down. Not only can you get 100% financing, but you can actually build in money for build out. So you're buying commercial space, need to tear down some walls, maybe add some electrical, buy some shelving, just some working capital to help with the transition. Yes, it can all be built in. Now let's talk term. One of the biggest benefits of the 7A program for buying commercial real estate is going to be stretched over 25 years with no balloon payments, just regular principal and interest payments for the full life of the loan, which is great because you don't have to worry about any balloon payments after 5, 7, 10 years. It's fully amortizing. The prepayment penalty is also short. It's a 3-year prepay, 5% year 1, 3% year 2, 1% year 3. So after 3 years, if rates have adjusted enough, or maybe you want to refinance, you can do so with no penalty. As far as qualifying, very similar to other SBA loan programs, it's got a cash flow. So something to keep in mind is that your business probably already has a rent expense. So that can be added back for the purpose of qualification of the loan. On top of that, the purchase of this commercial real estate space could also be considered an expansion, meaning, will this space add to revenue? By moving into a larger building, will you be able to take on more customers? Will you be able to sell more product? Projections is something that might be asked by the bank to be able to consider increasing the loan amount based on future cash flow earnings. Like I mentioned before, you can build in additional funds for build out, equipment, working capital, debt refinance, can all be tied into the loan as well. It's really important that based on historical cash flow, along with projections, your business can support this SBA loan payment. So when utilizing projections, the more, let's just say, aggressive they are, the more you better put in some pretty good assumptions on how you're going to hit those goals and how this space will help you get there. Also, from a due diligence standpoint, just like buying a home, an appraisal will need to be completed as well, making sure that the property is worth what you're paying for it. On the commercial side, we're also going to want to do some sort of environmental survey. We're going to want to understand what the historical uses of that property are. If there's been ever chemicals contained, either above ground or underground. Maybe there was a gas station in the neighborhood. Maybe it's an industrial park. A lot of banks require a phase 1 to be conducted. So what is a phase 1? Phase 1 is when a company actually goes on site and drills soil samples in different parts of the property. And they test those soil samples to see if there's any contaminants in it. And that's really important because the last thing you want is to buy a property that has contaminated soil, and that becomes your problem in the future as you go to sell that property. You know, in my experience, contaminated soil can have a large expense item to think about it. You got to dig up the ground and replace the soil with clean soil. You're going to want to know up front whether or not that can be done. If it comes back as a phase 1 contamination issue, then banks will order what we call a phase 2, which will be the remediation of it. So you'll have to understand what the cost of the fix is going to be. And that usually means you're going to have to negotiate with the seller whether or not they're going to cover the cost or whether you're going to cover the cost. And the loan can't close typically until that fix has been done. If doing leasehold improvements, just remember, banks are going to want to see a general contractor's bid. We're going to make sure we allocate enough funds for that build out. And we're typically going to build in a 10% contingency. So if you're going to do a $200,000 build out, more than likely we'll build in a $20,000 contingency just in case there's any overage. So again, tons of benefits of buying your commercial real estate through the SBA 7A loan program. The low equity injection, potentially 0%, the ability to roll in some leasehold improvements, working capital, new equipment into the loan, stretch it out for 25 years, the low prepayment penalty, the bank doing due diligence on your behalf to make sure you're getting a nice, clean property, are all elements of the SBA 7A loan program to help you own your commercial real estate. I hope you found this lesson helpful. Until next time, class dismissed. Thank you for watching this episode of SBA University. Hopefully you found this episode helpful. If you need to get a hold of me directly, I'll leave my email address down in the description. Be on the lookout as I will be releasing new lessons every week to help you in your SBA journey. Thanks.